Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. The stock markets in India have extended their gaining streak for the 7th consecutive day. They finished at the highest level since mid of December 2024 as of yesterday, and the move was largely led by the IT stocks, and the Nifty also managed to close above 24,328 levels as of yesterday as well. As we move into today, of course, the eyes will be on the F&O expiry, and of course the earnings will play a part, but on the diplomatic front there will be a lot of eyes as to how things are going to be developing after the deadly Pahalgam attack. Indian government on Wednesday evening announced 5 major diplomatic steps in response to the resistance front-led terror attack in Pahalgam. We heard from the Foreign Secretary Vikram Misri yesterday. Let's listen to what he had to really say about the Cabinet Committee security decisions after the attack.
The seriousness of this terrorist attack, the CCS decided upon the following measures. 1. The Indus Waters Treaty of 1960 will be held in abeyance with immediate effect until Pakistan credibly and irrevocably abjures its support for cross-border terrorism. 2. The integrated checkpost Atari will be closed with immediate effect. Those who have crossed over with valid endorsements may return through that route before 1 May 2025. 3. Pakistani nationals will not be permitted to travel to India under the SARC visa exemption scheme visas. Any SVAS visas issued in the past to Pakistani nationals are deemed cancelled. Any Pakistani national currently in India under SVES visa has 48 hours to leave India. 4. The defense, military, naval and air advisors in the Pakistani High Commission in New Delhi are declared persona non grata. They have a week to leave India. India will be withdrawing its own defense, navy and air advisors from the Indian High Commission in Islamabad. These posts in the respective High Commissions are deemed annulled. 5 support staff of the service advisors will also be withdrawn from both High Commissions. The overall strength of the High Commissions will be brought down to 30 from the present 55 through further reductions to be effected by 1st May 2025. The CCS reviewed the overall security situation and directed all forces to maintain high vigil. It resolved that the perpetrators of this attack will be brought to justice and their sponsors held to account. As with the recent extradition of Tahawur Rana, India will be unrelenting in the pursuit of those who have committed acts of terror or conspired to make them possible.
So in the wake of one of the deadliest terror attacks in the valley, especially on innocent tourists, we have seen that the Indian government has launched a decisive diplomatic offensive at this point in time. And of course, all eyes will be on the all-party meeting that will be held today. And of course, all the decisions that are taken thereafter to really bring to justice all the victims who have been attacked in the Pahalgam attack. Let's focus back on the markets though. Of course, overnight what we have seen in the markets in the US is that we've seen positive cues coming in from the US markets, the Dow Jones, the Nasdaq, the S&P 500. It all managed to end in the positive zone. So that's a positive handover that we've got. 1% higher for Dow Jones, Nasdaq up by 2.5%, S&P 500 up by 1.7%. Markets in the Asia Pacific region were although mixed in the early morning trading session, as the U.S. Treasury Secretary Scott Bessent has said that there is an opportunity for a big trade deal with China there. We are going to be looking at how some of those aspects are moving in trade today. The GIFT Nifty, although is trading at a muted trade at this point in time, 24,245 is being indicative of what our own markets can open in just about 2 minutes from now in the pre-open trade as well. We'll also be looking at, of course, a whole host of earnings that are coming in. But let's welcome our guest on board. We are now joined by Mr. Deven Choksi, who's been a frequent on market today, as well as you've been hearing from him all across as far as the tariff tantrum is concerned. And now we're going to be hearing from him what these new world orders between India and Pakistan amidst the geopolitical tensions really mean for the Indian markets and investors. Warm welcome to you, sir, and thank you so much for taking the time out. We have unfortunately seen one of the deadliest attacks in India in just about 48 hours from now. Do tell us, sir, what exactly do you really anticipate for the Indian market? So far, we were only dealing with the external shocks with the US, the policy changes on the tariff front, but now it's going to be more geopolitical, more at home. How do you really anticipate the markets to really trade then, sir?
Yeah, good morning. Well, I'm not a subject expert on geopolitics per se, but the fact remains that I think the country needs to be assertive, and that's what I think India is doing. In whichever situation if security threat poses, I think then probably I think you need to remain assertive. Whether you have to take this particular matter to international forum or you have to deal this particular matter on one-on-one basis, whatever it deserves, I think it has to be carried out. As far as market participation to this activity is concerned, I think definitely market is worried about the kind of situation which is happening on the cross-border basis. But the fact remains that I think the fundamentals of the economy and the corporate growth, I think, is not showing any kind of signs of slowing down. Neither I think it is showing any kind of signs of tapering off. So from a perspective of looking at, I think, the economy, the industry, and the markets, all three together, I think we are relatively on a safer wicket. And whatever it is on the cross-border terrorism past part, I think that will be taken care of separately. That's what I think we as market believe here.
Mr. Choksi, as far as the dealing with the tariffs is concerned, with the softer stance that coming in, it seems that the tariff talk is abating a bit. What does that really mean? Do you think the worst of the pain that we had to feel because of the tariff blow is kind of behind us, and now all the negotiations will be digested much better in the markets?
And I guess I think we have been also saying the same subject before also that the tariff implementation method is a madness in that particular method, and that method has to get corrected, rationalized, and that's what we are seeing happening. Probably India is becoming the first country as far as the US treaty is concerned, wherein we have negotiated well with them on the implementation of tariff, and we believe that I think having concluded with the visits of the Vice President of America, I believe that I think the on several forums also I think the different ministries have been interacting. It leads us to believe that ultimately the tariff would be a win-win kind of a situation for both countries. And should that be the case, I guess I think India will probably remain a relatively safer place to trade with. In my viewpoint, I think even if one has to make zero duty on some of the imported products of America, still domestic manufacturing, whenever there is a scope for replacement, I think will be cheaper compared to what US can produce and sell. So that should not be a cause of concern as far as domestic industry is concerned. And on the other side, if the gates are opened up for Indian companies to export, probably the target that we kept for $1 trillion export number from $800 billion, I think should be achieved sooner than later, and that will be a good music to your ears. I think as far as the industry is concerned. So I remain cautiously optimistic about the prospects and possibilities going forward.
The other aspect is that FIIs seem to be now looking back at India. We have been seeing signs of, FIIs returning. Even yesterday, we saw 3,332 odd crore rupees being poured in by the FIIs as well. Would you say that because of all these aspects that you've touched upon, even the FIIs will find favor with India?
They trade. I think they trade in the weather, I think, which is more conducive to them. Currently, this is very conducive to them because on one side you have lower crude oil prices. Because of lower crude oil prices, you are having the lower commodity prices. Because of the lower commodity prices and crude oil prices, our import bill remains restricted. And as a result of which, I think our currency remains relatively more stable than before, which was there a couple of months back. I think so. Compared to that, our currency remains more stable. So three C's: the crude, the commodity, and the currency is having a positive influence on two I's, that is
Yeah.
inflation and interest rates. And because of that, I think we are likely to see the positive direction for us. So I think they are bringing money because of that reason. That's what I understand.
Okay. Coming back to the earnings now, that's something that we are looking at, sir. And you also pointed out that there is no sign of a slowing down at this point in time. Just briefly, 24,312 miles lower opening in the pre-open space for the markets, 14 points of a cut. But we'll hope that this improves for the better. But we've had 7 days of consecutive moves, so keep that in mind. And it's the expiry session as well. On the earnings front, sir, IT space has largely come out with all the heavyweight earnings. You have TCS, Infosys, HCL Tech, now even LTI, Mindtree and Wipro that have come out with the earnings. Just wanted to get a sense from you, what was being expected on IT earnings this time around and what has been delivered from the large IT pack. What are the things that you're taking away from, and how would your new approach be, fresh approach be post the earnings on the IT space, sir?
So as expected, I think the companies came up with results, I think, which are slightly muted results. So that was accepted by the market, and market was expecting it, so it is accepted by the market now. That's not a new thing that we are talking about. Fortunately, most of the companies ended up giving a commentary which is quite resilient, and they are basically suggesting optimism as far as the new order inflow is concerned. Fortunately, in the given quarter also, the amount of order inflow has not been so very discouraging. In fact, I think it has been slow, but it has been encouraging. So, in my viewpoint, I think on that front, things are quite okay. If I look at the prospects going forward and then picking up from the underlying tone of the company's commentary, I think the Indian IT service provider companies are going to be in demand, a big time demand on two counts. One, of course, I think the AI implementation is a big requirement across the globe, without which I think the most of the companies will not have the business model to survive. So Indian IT companies, they position well on that particular front. On the other side, I think the more important part also is that I think many of the global players are entering into India with the GCCs that they are asking for. And Infosys, Wipro, TCS kind of companies are already playing a very close strategy with these customers, where they are helping them set up the GCCs and in turn, I think, retaining them, growing with them, etc. So in my viewpoint, I think the things are looking relatively better and stable. Fortunately, the prices have corrected, and because of that, I think the downside risk in most of the IT companies is relatively less. We prefer to stay with engineering R&D companies in our portfolio because that's where we see more amount of B2B play, more amount of strategy play that we are seeing at this point of time.
So, sir, if I have to ask you a pecking order on the IT pack, do you have any names which you have post earnings probably kept in mind as to how your approach will be?
So we are more comfortable with engineering R&D space, as I alluded earlier. And I find that I think those companies are relatively better off, be it in the autonomous vehicle space, be it in the healthcare space, be it in the aviation space, or for that matter, even defense space. I think companies which are producing a solution for their OEM customers on a B2B basis, they are taking care of their requirement. I believe that I think they are relatively better off.
Hmm. Also wanted to get a sense on the other aspect that has been so far supporting the recovery in the markets. We are already upward about 2,500 points from the swing low that we saw of about 21,700 and thereabouts. And it's been the banking and financial space that has clearly led this space. We have discussed this space with you so many times, and you have constantly believed that banks and financials are here to probably provide that extra edge and the recovery, and they have proved to be. Many stocks are now trading at about their 52-week highs when we talk about large private banks. Do you still believe that they have the potential to even continue to lead the recovery in the markets from here on as well? Is there still an opportunity for investors to really go with those banks, beyond the earnings move that we've already seen?
So as I see it, I think most of the large corporate banks and the large NBFCs, they are either doubling the size in 3 years or in 4 years, which means on a scale of AUM that they are operating with, be
Yes.
it NBFC, be it SBI, be it ICICI, Axis, Kotak, or be it Bajaj Finance kind of players, I think the scale of the AUM and the growth rate on that they are operating, they are suggesting that in 4 years' time they are doubling the size of the book at such a huge scale. If the business is getting doubled in 4 years' time, I think this business should easily give you a return of around 20-25% as far as I think the stock price is concerned, provided I think you bought it when the market has given you an opportunity to correct at levels. So we remain distinctly positive. We look forward to any kind of correction in the stock price to buy into this particular thing because the
Okay.
long-term trend remains absolutely clear for us.
Okay. So on the NBFC says there is some report saying that Bajaj Finance may be looking at a split and a bonus now, coming on April 29. What should be investors' approach here? It's already been inching higher for the last 1 month odd or so. Do you think one should probably lap onto the opportunity? We've not seen a move post bonus on Reliance Industries, kind of a heavy stock. So ahead of bonus, ahead of split, what should be the ideal approach for investors on Bajaj Finance?
So when the company declares bonus, I think we first ask one question: okay, whether do they see the growth in the business? And here in this case, I think we are seeing the growth of not a smaller level, but on a close to 4 lakh crore AUM, they are seeing a growth of having double the size in 3 to 3.5 year times on that AUM. And that's where they are probably increasing the equity. That's where probably they are giving the bonus. Largely because of the fact that the confidence is emerging stronger about serving that increasing equity. So we remain positive. And yes, I think they let the meeting play out and the bonus get declared and the split take place. But we remain positive about the prospects going forward for the business as a whole.
Okay, fair point. Apart from this, on the overall earnings, where else do you see there could be outperformance coming in? What would your focus be in this quarterlies?
Well, I guess I think the individual stocks have clearly matter more than I think the overall sectorial play that you are hinting at. In my viewpoint, I think individual companies which are in the engineering R&D space as far as IT is concerned, companies which are in the lending space, housing finance included, I think they are in relatively better situation currently. We find that I think the companies which have adapted to the technology, the user of the technology, they are also equally better off in this kind of an environment. So we remain distinctly positive about the prospects going forward. Yes, I think we don't see a very big differentiator emerging at this point of time in the marketplace. Unless we see some AI-based applications, I think, and the products coming into the market which are consumed by the industry, I think that the overall environment will remain relatively steady, and you will get, I think, a rational opportunity, I think, for buying into some of the larger companies which are likely to grow double the size 3.5, 4 years time from now. Power ancillary, and the manufacturing space therein remains, I think, relatively more sure about the growth as well in next 3 to 5 years from now.
Okay. The other aspect that I wanted to discuss, we've not spoken to you in this last 1 week or so, and when gold prices have shot up to all-time high levels, just wanted to get a sense of how are you really looking at, the way things are changing for other asset classes vis-a-vis equities as well. Would you be a buyer of gold at all-time high prices, or do you think bargain hunting in equities is much better at this point in time? And what should be, because the geopolitical tensions still remain, uncertainties still remain, despite the fact that gold has shot up 30-40% in a very short span of time. So of course it seems to be in an overbought zone. It seems that there should be some kind of a correction, but the things pushing the gold prices have not changed. So for a retail investor to decide where do I do fresh allocations, what would you advise?
Yes, I think the gold demand and supply situation drives the price. Understood. This time around, as against the household buying gold, I think the central bankers are buying gold. That is, I think against the forex reserve, they are buying gold as a stability measure for the economy. So certainly the demand side situation is remaining stronger, and that's a reflection in the in the gold prices. Whether as an individual investor or a trader, I think you would like to trade. I'm not too sure. I feel that I think the equity per se remains relatively more favorite to me. Gold definitely, I think, is because of the reasons which I explained. I think is in the higher territory, higher price zone. Overbought, probably at the household level, I will not justify this price. But at the country level, sovereign level, I think for the sake of forex reserve parking, everything is justified, I guess. So one is not debating on this subject beyond a point, but I feel that I think the risk element will remain higher given the kind of fluid geopolitical situation that we are into currently.
Would you be keen on any of the stock market related gold plays, jewelry stocks, or maybe gold financiers, sir?
I think the financing business remains steady, but we feel that I think the consumer lending and the housing finance will be relatively more sure from the point of view of I think absorbing the shocks in the market. They remain relatively more resilient in their growth prospect as well. So immediately buying a pure focus gold finance company, we don't immediately get into. And as far as I think buying the consumption stocks like jewelry, etc., I think we leave it to ladies. I think they would prefer more about getting into that particular subject.
Okay. Before we let you go, sir, and before the markets open, I have to ask you, in this recovery in the markets, are there any stocks that you have identified that investors can continue to now look at for the rest of the new fiscal year that we've started off with?
So fortunately, in the corrective downside in the market, the likes of Bajaj Housing Finance, likes of Tata Technology, they have been offering a good buying opportunity, and we believe that I think having selected them from the long-term investment point of view, we believe that I think they offer good prospects with a corrected market price. Of course, I think investors will have to have a lot of patience to stay invested into this kind of company because they are not easily cheap at this point of time on valuation front. You need to buy them, wait, and then probably get the benefit out of your investment over a period of time. That's what I think we tell our investors.
Fair point. Well, thank you so much, Mr. Choksi, for being
Yeah.
with us. It's always a pleasure to really listen to all your wonderful insights, despite all the difficulties that the markets are surrounded with. Your clear thought really helps all our viewers to really keep at it, keep the long term focus on the markets, and keep investing with that focus. Thank you so much. Appreciate your time as always, sir. All right, the markets have opened a tad lower. Viewers, 50 point of a cut is what you see in the open, 24,279. It was already being indicated that there will be a muted start. But already, like I pointed out, we've had 7 days of gains. Let's look at how the markets are shaping up. Bajaj Finance, 1.7% higher. It's the top mover there. Remember, there is this stock split and bonus kick that's coming in for the stock. Bajaj Finserv also up by 0.6%. You have Tata Motors from yesterday also, it's pulled up again, 1.5% higher now for Tata Motors. It's among the top movers. Tech Mahindra from the IT pack and IndusInd Bank. So it's no clear trend in terms of the top 5 stocks. It's a mixed trend coming in. Let's look at the kind of sectors that are moving today. Pharma is pulling up 0.3% higher. Auto, realty, consumer durables, that's also moving up in trade. Then we also have PSU banks and FMCG as some of the pockets that are pulling up. But what's dragging? Banks, financials are actually lower in trade today. The Nifty bank down by 0.3%. Private banks are pulling it down 0.4% lower. Infra stocks, oil and gas, financial services and metals. There's a mixed trend on the broader markets, absolutely flat with the positive bias on small caps, with the negative bias on the mid cap index. When we look at the PSU stocks, that's also mildly in the red, but some of the stocks are hovering higher. So an IRFC, for instance, REC, NHPC, BPCL, IOC from the OMC space, those are some of the stocks that are buzzing. Let's also look at how the market movers are being shaped up in the broadest index, absolutely in the Nifty 500 names. Any key names for us to really track here? There is Sadbhav Engineering that's moving up. There is Thyrocare Technologies. I think this is post earnings that the move is coming in 11-12% higher. Then you also have certain other names. ILFS Engineering is moving up. BGR Energy Systems, Megasoft. Not really big names that we usually discuss for all our viewers. Let's look at some of the other aspects. The Nifty next 15 names. You have Bajaj Housing Finance, again earnings play 2.5% higher. Divi's Laboratories 2% up in trade. Samvardhan Motherson, Siemens is also up and about. Adani, some of the stocks, Adani Green, Adani Energy Solutions, Ambuja Cements pulling up in trade as well. That's among the Nifty next movers. On the Nifty, within the small caps that's pulling up in trade, let's look at the winners in case there is anything interesting. Godfrey Phillips is up 4%, Newgen Software is up 3%, Ramakrishna Forgings, you also have Ramco Cements, Wellspun Corp, International Gemological Institution of India, Swan Energy, Reddington, Wellspun Living, Inox Wind, Newland Laboratories. These are all the stocks in the small cap basket that are actually buzzing in trade. F&O space, you have Dalmia Bharat, again earnings play, and Divi's Laboratories. Persistent Systems is another one that's actually pulling up in trade for us to really watch. Of course, we'll be waiting and looking at another guest joining in now. Rudramurthy is joining in from Watch 9 Investments. So, warm welcome to you, Mr. Murthy. Good to have you with us. We have actually got you at a difficult time when Indian markets are surrounded with the negativities, not just on the geopolitical front between India and Pakistan, but also globally, as things have been very, very uncertain. But let's hope the 7 days of a rally that we have got as a recovery continues to show the resilience in the Indian markets. And you're the best person to really help us understand how to navigate all these difficulties in the markets, sir.
Thank you so much, Sakshi. Definitely, yes. Whatever has happened now at Pahalgam, I definitely have my black mark on towards the event, what has happened. And anyone who is human and who has heart, being a human, you should have that. Emotions are very high, and the only answer you can give to all this is through action and just not through words. And my condolences and my support definitely to all those family members who have lost their very close family member there again. So I definitely have my full heart towards these people and the family, and I want definitely a fitting reply and an action oriented reply to this event which has already happened from the central government and from our army.
Absolutely. Rudra, coming back to the markets then, what's the sense you have? 7 days of a winning streak is what we have. We are at a month's high move as well on the Nifty. Do you think this recovery can continue going forward? On the one hand, globally, the things that were kind of weighing down the sentiments on the street was the tough tariff talk. There is some kind of a softness on that front that we expect, even a softer stance on China for that matter. What would that really mean? Are we out of the woods completely from the tariff blows that we had seen of late and that had pulled down the markets to 21,700 thereabouts? What's the sense that you have?
Sakshi, this is the $1,000,000 question, and let me answer that to all our viewers. First of all, see, telling now that markets will move up, buy into private banks, all that is too late. And I'm very clear, and I'm sure you remember 2 weeks back, I was shouting and saying, buy only private bank, private bank, private bank. Look at the moves in HDFC Bank, Kotak Bank, ICICI Bank. And I was continuously saying this is the space to be in, and private banks will do very good. And look at the prices of private banks now, and even look at that stock specific call which I was talking about, Indigo. I said
Yes,
was at 4,700, 800. I said buy it at current price, buy it even at 5,000, buy it even at 5,200. I was saying when it was 4,800, and now it
absolutely.
was over and above 5,500. And let me now continue and make a bold statement. Buy it even at current market price, Indigo, and you might buy it at 5,500 now. And I'll tell you, buy it even at 5,700, buy it even at 6,000, because for me there is still a long way to go in this stock. I've even repeatedly told this will be the stock of 2025 for me, and I won't be surprised to see even a 5-digit figure, 10,000, to come on Indigo. And this is a stock definitely one has to hold in your portfolio. Don't look at small gains and get out. Even though there is a gain of 700, 800 rupee from where we spoke, still there is long way to go for Indigo. We are yet to see even the quarterly results coming out, and I feel definitely the numbers will be very great for two important reasons. Number one, the Kumbh Mel has resulted in lot of aviation use, and you will have the revenues going up in a huge way for interglobe aviation this quarter because of the Kumbh Mel. And also crude oil prices coming down is very positive. So on one end revenue going up, at the another end the main operating cost coming down is a very positive thing for the stock. And no doubt the stock price has already given that move. Still there is long way to go. So for me to cut short the entire story and make a clear bold statement, what I'm saying is we have seen already a huge rally, and we have to now buy the dips. I don't want to buy here fresh, and you have to be very sector specific and stock specific right now in this market. I am still bullish on the market, but only apprehension is in just last 8 to 9 trading session, you have seen an up move of close to 2,600 points on Nifty, and Bank Nifty in last 8-9 trading session has gone up about 6,500 points. So after a 6,500 points rally in 8 to 9 trading session, and after a 2,600 point rally in Nifty in last 9 trading session, buying here, you are too late for a short term trade. So you have to be right now more sector specific and stock specific. I'm still bullish on market, but what will be good is if you are having position, continue the long position. But if you are yet to take any position and you want to take a fresh buy, wait for dips to buy and don't buy at these levels for a short term trade. But I am very bullish on market. Yes, now all the fundamental news of Trump tariff and the whole incidence is getting cooled off, and also locally we are seeing good result season and the dollar index below 98, and you are also now seeing slowly FIIs have been now buyers in market of late, and all these are positive signs definitely for market. But
Yes.
only thing is buy on dip is what I would suggest for a fresh entry in general right now.
Absolutely. PSU banks are also rallying in trade today, half odd percent higher as the top moving index. So beyond the private sector banks, sir, are you looking at the large PSU banks as well now?
Definitely, Sakshi. Yes, you have now more valuation comfort, and relatively, PSU banks will do much better than private banks from here on, because we have already seen the big move in private banks, which I was repeatedly talking. And right now, again, I'm making this bold statement. Yes, SBI and Bank of Baroda will be two stocks which you can definitely look at from PSU banks, and it will outperform. So, at current market price, I'm definitely liking PSU banks. I like OMCs, oil marketing companies. It's a choice whether you want to go for Hind Petro or you want to go for BPCL IOC. You can make a choice. Slowly, I am now seeing, even for that matter, power as a sector doing good, and on charts it is definitely giving some amount of strength. So even that is another sector. It's a choice whether you want to pick up NTPC, Tata Motor, or even look at power financing companies where you have PFCs and RECs which are definitely good at current market price. Look at autos as a sector which is slowly now giving signs of recovery and positive move. And here again you have a choice whether you want to pick up Maruti, you want to pick up M&M. For me, these are two strongest stocks from auto at current market price. Even for that matter, Tata Motor looks good and it has seen enough correction. So it is a time now to go into sectors which are yet to perform, which are showing current level strength, and slowly you will see the move in these stocks to come from now on. So I will be still positive on private banks, but yes, wait for dips to add on. And I will now look at PSUs, I will look at OMCs, I will look at autos, I will look at power. So these are sectors where you have a lot of opportunity to get in now fresh, and wait for overall market to give some dip, so that it is good to add at those levels on buy on dip strategy for a short term trade, not to buy at a very highly overextended levels here. But however, if it is a longer duration what you have, then yes, you can definitely get into market even at current market price. But definitely this is not a market to short. I am very clear, this is a
Okay.
market to buy on dip, and you have to be very sector specific and stock specific.
Okay. On the banking space, Jammu and Kashmir Bank is just, I wanted to highlight that. Remember, the stock fell 10%. It was the biggest loser on the banking space as of yesterday. This, remember, happened right after the Pahalgam attack as well. So this bank really slipped quite a bit, and we are now seeing some recovery, about a half odd percent kind of a recovery as of today. On J&K Bank, those who have the positions, any suggestion there, Rudra?
See, for me, if you want to go for a bank which is more a mid cap to a smaller cap kind of a bank, I will still pick up banks like, let us say, Federal Bank for me looks very, very good. Or for that matter, I will still go with a PSU bank like a PNB if you want to buy. Even though my top preference is in SBI and Bank of Baroda, but if you are trying to buy a mid cap kind of a bank, I will still prefer a Federal Bank, or I will prefer a City Union Bank, or for that matter, I will prefer something like a Punjab National Bank, than going into stocks like either a UCO Bank, a JNK Bank, and all these stuffs. where I don't see much amount of clarity in these counters. So if you have JNK, I will definitely advocate you to shift to either Federal Bank or go for a larger bank like an SBI or a Bank of Baroda. But if you want to get into a mid cap kind of a bank or a lower market cap bank, then better to even shift to something like a PNB than being into JNK.
Okay, got that. Let's take another view also. Another space that's also buzzing today is pharma space that we haven't discussed. Pharma space, particularly Rudra, what's your sense? Today we've got Syngene, and that's going to be reacting to its numbers. CDMO is a space that has been locked talked about over the last couple of months as well. Pharma was also being seen as one of the other vulnerable spaces because of the export oriented nature and the way tariffs were being talked about. What exactly is your sense there? Syngene is seeing a sharp downtick of 9.5% lower in trade today, 677 on that front. What would you say?
Sakshi, very clearly, even last time when you asked a question on pharma, I said I don't track pharma closely, but still on charts, I gave you three stocks, and I very well remember that I said one is Divi's Lab. Look at the
Yeah.
chart pattern, very, very positive. I even spoke about second stock from pharma if you want to buy. After Divi's Lab, I said Laurus Lab looks very strong to me. And the third stock, which I said if you want to buy a mid cap kind of a pharma, look at something like a Biocon. Even now I keep my same stance on pharma. So if you want to buy from pharma, look at Divi's Lab right now. Even at current levels, or when there was tariff issue, and then yes, Trump will also now consider pharma as a sector. He will levy tariff there also. All that what came also did not do anything negative to Divi's Lab as a stock price. Charts are very, very strong. So that is where if you have to be in pharma, you have to be very stock specific. Similarly, my view is also on IT. So IT is not a sector generally where you can buy, because whatever up move we have seen in last 2 3 days, that has been more a short covering rally in IT, because everyone were short in IT. And yes, some amount of news flow in IT, and then this tariff things now going down. I even tweeted 2 weeks back saying that this Trump, the fight between China and US in terms of tariff will be ignored by market, and this is what I said 2 weeks back, and that's what you are seeing for last 2 days now, that market is definitely ignoring all this tariff news or anything from in fact Trump is now settling much better, where he wants to reduce tariff with China. So what I want to tell you is pharma as a sector, IT as a sector, generally if you want to buy into this sector at current market price, you have to be very stock specific. You can't buy anything and everything. Rather, when it comes to private bank, yes, you can buy anything and everything. NBFC, you can buy anything and everything. Insurance stock, you can buy anything and everything. But when it comes to IT and pharma, you have to be really stock specific there. So three stocks which I like in pharma, and I continue to like them from my past recommendation. It will be Divi's Lab, Laurus Lab, as well as Biocon.
Okay, got that. So that's as far as the pharma space is concerned. Let me also see that Divis Laboratories, as Rudra has marked, is the top mover on the FNO space, 3.8% higher, and that's where he's keeping his eyes out on as well. Broader markets now picking up some pace. The mid-cap 100 index is about 0.5% higher. You can see Tata Elxsi, Persistent System, Mazagon Dock Shipyard, Cochin Shipyard, Bharat Dynamics also picking up pace now. From the railways also you have RVNL that's picking up pace. You also have names like RVNL, Oro Pharma, Hindustan Zinc, GMR Airports Infra, Suzlon Energy. All of these stocks are actually moving up in trade as of now. From the mid and the small caps, Rudra, any key stocks that catch your attention?
Sakshi, from the list what you have given, yes, two stocks I will be interested from the mid
Okay.
and small cap arena. Definitely one is Suzlon. So if you see
Okay.
their numbers, yes, it's a good one which came, and I feel at levels of around 58, 60, it's a good price to buy. I understand a lot of retail people are stuck in these type of stocks,
Yes.
but do
Yes.
understand there is a difference between Suzlon and Idea. Idea, I have no idea what will happen next. But Suzlon is a stock where you can definitely look at buying them. And even if my memory goes right, whenever you have asked me even about the new age or e-commerce kind of a play, I've always told be in two stocks in that sector. if you want to be, that will be Zomato and Paytm. And see the moves already in Paytm and see
Yes.
the move in Zomato also. But whenever it came to this sector, I said, except these two stocks, I will not look into anything else. Look at Paytm, even at 890, I am making this statement. This will be a 4-digit stock very soon. I know people hated Paytm. I myself told, don't buy Paytm because you have to keep paying M to M. But that
Yeah.
was at
Yeah.
2000 plus level. That was not at 800 rupees. So one has to understand everything has value at a particular price. So Paytm at 2000 and Paytm at, let us say, 700, 800 are not same. Similarly, Suzlon at 200 and Suzlon at 60 rupees is not same. But then if you ask me, Rudra, what about Idea was at 100 rupee and now Idea is at 7, 8 rupee? Is it not same? So can I buy? No. For me, Idea is not a stock to buy at 7, 8 rupee, even though it was at once 100 plus. So for me, these are difficult sectors and stocks to pick. They are not easy. 1 out of 10 will only perform in this category or plethora of stocks what you have in this category. And if you want to buy this kind of a category, and if you have to be very stock specific, choose the right ones from there. In fact, I will never buy either a Suzlon, nor I will buy even a stock like, let us say, we discussed in your list, one was Suzlon, which I really liked among all the stocks, whatever was mentioned. And yes, I do even like Zomato, I like Paytm for that matter. So if you want to be in mid and small cap, and if you want to pick some of these stocks, you have to be very choosy in that. In fact, I will use any of these up moves in other general mid and small cap stocks to make a revision of your portfolio, shift from the bad ones to the right ones, and use this opportunity or market rise to make that necessary shift. And you have to be very stock specific when it comes to broader market. I remember Force Motor was one stock repeatedly I was recommending, but now Force Motor is not at 7,000 or 6,500. It has crossed 9,000, 50% return or close to that 40-50% return we have seen in Force Motor in last hardly 1 month, if I'm not wrong. So these are stocks where I have entry exit opportunity also. Liquidity is very, very important. Spreads have to be lower when you buy broader market. I can tell you a lot of stocks which can go 100% in 1 month, but it
Yeah.
is only visible on a screen to you. You can't get an entry and exit. Liquidity is a big concern there. And what is the meaning in telling stocks which can move 100% up where you cannot buy them or sell them? So keeping even liquidity in mind, keeping the spreads in mind, market depth in mind, keeping the market capitalization in mind. Yes, if you want to be in this sector, look at some of these stocks. Like for example, for me, Force Motor on a dip is a good buy. Look at even Strides Pharma. Star is a star performer, and I like that in mid and small cap. Even for that matter, Arbindo Pharma is another stock from pharma mid cap if you want to buy. Biocon looks good for me if you want to buy from broader market. So there are stock specific calls you have to take in this particular arena, and not to just buy anything and everything. And you have to be very choosy there.
Absolutely. What about the defense names and the shipbuilder names that are coming back? Mazagon, Cochin, GRSE, all are up and about in trade today, even Bharat Dynamics for that matter. We've been seeing some moves. Cochin Shipyard is also up in trade. Defense names, what's your fresh approach, Rudra?
See, I have only two stocks to recommend if you want to be in defense as a space, and I'm very clear in this area or in this sector, only two stocks. Number one will be HAL. That is a stock you can definitely buy. It has given decent correction from its top, and yes, it has that monopoly. And this is a stock from a base of around 3,100 levels. It has given already a big pull up, but still at current market price or on any dips to levels closer to, let us say, 4,000, 4,100, I will be a buyer in HAL. So this is one very strong stock from defense if you want to buy the defense as a theme. And the second one which I would prefer from the same will be BEL. So Bharat Electronic has just now given a fresh breakout, and it has consolidated and it has moved beyond those levels of 307. And if it sustains above 307, yes, this stock can go towards its all-time high, so which is at around 335 to 340 zone, and available in futures. So if you want to play defense as a theme, clearly I have two stocks. One is HAL and second is BEL, and nothing beyond this.
Okay, got that. So that's as far as the defense names are concerned. One more stock that's pulling up in the mid-cap space is Tata Elxsi. I just wanted to point that out. It's now 4% higher in trade. We've been talking about the IT space. Now, the mid-caps, there is some kind of a move. Tata Elxsi, Persistent, Coforge, they're all coming back in fine shape. Tata Elxsi has been an erstwhile wealth creator, but it's been lying low for a lot of time. Do you think the time has again come to really look at some such stocks?
Yes, Sakshi, one has to also understand these stocks had already run up enough. And if I'm not wrong, the peak on Tata Elxsi was somewhere close to 9,000. And from 9,000, the stock came down. In the correction, it came to 4,700. So, are you ready to see a 50% kind of a drop? And can you still hold on to this stock? And now, do you want to buy it? Is a question. So, yes, for me, if you want to pick up some stocks from IT, I'll be very clear. Stock like Tata Elxsi, for that matter, OFSS, even at current levels, for me, yes, Oracle Financial is a good stock. Tata Elxsi is a good stock. Coforge is a good stock. So you have to be very, very choosy when it comes to IT. And I said the same view for even for that matter, sector like pharma, metals for that matter. So for me, there are two categories when it comes to sector. One is the sector where all stocks can be good, and generally the sector has more up move to do and it has lesser headwinds and more tailwinds. Then you can look into private banks, insurance, OMCs, NBFCs, all that. But if you want to be very choosy in stock where for you it is more a bottom up approach and you are a good stock picker, then let us say you want to go into sectors like IT, sectors like metal, pharma, you have to be very stock specific. So my views on IT, again, it is a sector where you are seeing more of short covering, not a fresh buy. Results till now, whatever has come from IT has been more a tepid, and the move up you are seeing in spite of bad results in IT is only because of short covering. All were short there. Even bad results are taking the stocks up because of the positioning of the shorts which are there already in those stocks. So if you want to pick some stocks from IT, for me, it will be very stock specific. Three stocks I have named. It will be Coforge, it will be Tata Elxsi, and it will be OFSS.
Fair point. We'll definitely keep that in mind. Thank you so much, Rudra, then for being with us on the morning edition and helping us navigate through all these opportunities that exist for investors. Always a pleasure to host you, and we hope that you keep coming back to guide all our viewers of Business Today and of Market Today. Thank you so much.
Thank you so much, Sakshi.
All right, viewers, we'll start to wrap up the morning edition of Market Today. 55,424 for the Nifty Bank. It's now turned green. What's also important to see is that beyond the Nifty, we are seeing some more sectors come back into the green. The breadth is improving. Pharma, PSU banks, private banks now up in trade, and that's pulling up the Nifty higher. You can see even the broader markets, IT, now the Nifty Bank is turned green, and that's what is supporting the sentiments. IndusInd Bank is the top mover. Nestle, Tech Mahindra, Bajaj Finance, Axis Bank are some of the other top movers on the Nifty. On the laggard front, you have names like Tata Consumer Products. Eternal is down in trade today, about a 1.5% or so. ICICI Bank, ONGC, M&M, Bharti Airtel are some of the top drags on the Nifty. But we'll keep tracking the market for you throughout the course of the day. And remember, it's an earnings heavy day, so we'll be having a lot of earnings conversations for you. So keep an eye out on that throughout the course of the day as well. Stay tuned on Business Today. A lot of action up for you up next. Hello and welcome. You're watching